Mike was just talking about the core services ex-housing as the seaweed that the Fed is saying that they're going to hinge their inflation outlook on, and people pointing out that that fell to less than 5.2% on a year-over-year basis from 5.7% in the prior month. Taking a look at that type of cooling might give the Fed some encouragement to move away from some of the more aggressive rate hiking or at least rate stabilizing projections that a lot of people had. Do you think that that's enough, Vincent, or do you think that this is perhaps a head fake?
I think it's a head fake. I think that you have it right that the chair does slice and dice the data because he wants to get the slightly more than half consumer price basket that he thinks has a lot of momentum. Services less shelter still has momentum. That the shelter inflation is projected to continue to soften. That will be good news, but it doesn't change the core problem. There's some momentum there. The core question to ask, sorry to use that part, is was today's print disqualifying for Fed action in June? I think the answer is no.
So you think that the bar, Vincent, this is important. You think that the bar is more heavily weighted to fighting inflation still, even though a lot of people think that the bar is now in preserving financial stability and perhaps preserving employment. You think that people have that wrong?
I think the bar is about stopping. Because once they stop, once they go a meeting without policy action, everybody is going to assume that the Federal Reserve has drawn a line under this policy firming cycle. And so you better be sure that when you stop, you're not going to look back at regret, just a couple months later. Remember, they slowed a little early in January relative to what, in retrospect, they think they should have done. They're having flashbacks to that right now.